All right. Hello and welcome to Processing Risk. This is your very jet-lagged host, Tony Cañas. And today I have with me Jacob Geyer, Chief Insurance Officer at CompScience, and Mike Seling. I'm impressed that I remember that one. Seling, VP of Growth at CompScience. So first of all, thank you both for joining me. As I mentioned, I just got back from 2 weeks in Australia and New Zealand. And even though I've been back for 3 days, I'm still jet lagged. So hopefully I'm not too out of it. And for the listener, important to know, we did do an intro episode on CompScience Science. That was episode 361. So if you want the original story about the company, go check out episode 361. I'll include the link. Today we're doing an update. So Jacob and Mike, thank you so much for joining me today.
Absolutely.
So what's new at CompScience?
Yeah, so there's a couple of big things that are going. So the first one is we've had pretty good growth and expansion within our wholesale model. We've had growth of about 30x over the last 3-4 months, which is fantastic. We've had some great customers. We're now licensed in 30 states to act as a wholesaler. We've added some additional markets, so we're getting some great traction from that perspective. The other big announcement, and the release is coming on March 15th. So stay tuned. Is we are entering into an MGA partnership with Nationwide, and that's actually backed by Swiss Re as well. So we're extremely excited for that. That's going to allow us to have even more ownership and control of the underwriting process, the servicing process, and we can't be more excited to be partnered with two industry titans in Nationwide and Swiss Re. Yeah. Huge. So that's it's been a year plus in the making, but we're really excited. We are going to be starting in 10 states. From the Midwest going into the Southeast, and then a national expansion probably over the next 12 to 18 months.
Mm-hmm. Fantastic. So how does this change things for the brokers and the clients that you work with? How does this improve things?
Well, I'll give a couple of things, and Mike, feel free to jump in as well. First of all, this provides obviously an additional market, and a market in Nationwide that has really built up their program space. And so while they do have their more direct to agent book of business on that side, they've also done a great job in picking program partners along the way, and they've been gobbling up market share as time has gone along. And so this is it's kind of a tried and true method for them, and it provides us even closer access to the customers. It, rather than having it be kind of a 4-party discussion where we've got client, retail agent, wholesaler, and insurance carrier, it's a little bit more simplified. There's aren't quite as many handoffs that are going to be taking place because we'll be controlling, for the most part, the underwriting process, the binding process, and such.
Yeah, and certainly with the addition of Hartford recently on the wholesale side, together with AmTrust and CompWest, gives us really a lot of breadth and appetite and really pricing flexibility across all of our markets. And at the end of the day, the outsider, in addition to the markets, behind every policy is our technology platform. So that stays and remains consistent across all of those 4 platforms. And
the technology platforms, I just realized that didn't give any sort of intro other than go check out the last episode. But if I remember correctly, in super simple terms, basically industrial type of environments, the system uses the cameras in order to prevent accidents. And if I'm not mistaken, by using technology that came from the autonomous driving space, right?
Yeah, our founder's background was in computer vision and AI, building models in the autonomous driving space, and really took that technology and approach and applied it to traditional loss control, which, at the end of the day, those folks are only on a job site or at a facility for a couple of hours at a time, maybe a couple of times a year. I'll be honest, everyone's on their best behavior when they're there. Whereas when you utilize existing video footage, you really get a perspective of what people are doing when they think nobody's watching. And so by utilizing video footage, not only do you have that perspective, but you also we typically gather 50 to 100 hours, if not more, particularly on larger accounts. And so you have a very broad perspective of what people are doing or not doing that should be doing by consuming that video footage. So it really gives you kind of for that period of time that we're monitoring, a 24/7 perspective on workplace safety. And then we convert that to usable, actionable items that the client can then implement to improve their workplace safety.
Okay. What size of accounts does this make sense with? Like, I'm guessing that there are some manufacturing operations that are too small.
Generally speaking, our minimum premium is about 50,000, and that's really the breaking point where we see a significant lift in the number of organizations that, first of all, have the square footage that would necessitate cameras, but also have the resources where they have some cameras installed. And what we've seen is above 50,000 in premium, there's about a 90% uptake rate in camera installation. There isn't really a limit on the upper side. Our solution really works in several facets. So first of all, it works on guaranteed cost policies from 50,000 and on up, but it also can be utilized for large deductible policies. It can be utilized for self-insurance. That's more of a software as a service sale for us, but we can certainly do that. It's just the buying process is a little bit different, but the access is going to be the exact same to the technology that we're providing and the insights.
I was just going to add, and to be clear, the technology works across any company, any industry. If they've got video technology in place and we can differentiate between employees versus customers, the technology works. Where we've seen it most competitive, if you've got a $50,000 account with a clean loss history, the industry is such that you're going to have a dozen carriers, if not more, fawning over that account. So it's just going to be beat down in price. Where we're ultimately having the most success is if there is somewhat of an insurance pain, meaning they've had some claims, their mod is going up, and they're afraid of hitting a threshold of losing business, or they're simply a debit mod where they know they're paying too much for insurance and they want help getting that under control. Our technology works everywhere, but it's most useful where the insurance buyer is feeling some pain and needs help in solutioning.
Okay, so basically for the brokers that are listening, you for your accounts that are in pain with workers' comp, that have the video or that would it make sense to have video, and with the new capacity, you're easier to access and more able to actually write the accounts.
Correct.
Absolutely.
Okay. Has anything changed when it comes to how to access you guys? So if a broker that's listening that doesn't have access, is that process? What is that process now?
Mike, go ahead.
Dennis? Yeah, send an email to submissions@CompScience.com. Send us the Accord app, loss runs, and a mod worksheet. If you're not already contracted with us, let us get to work on the quote for you. Let us show you what we can do, and in the meantime, we can work on the contracting side of it. We pay a competitive commission, and we're currently running an incentive for March and April effective dates we're including a $2,500 incentive for all bound business on top of an already competitive commission, typically 8 to 10%. So you're not usually taking a haircut on the upfront commission, and we're paying bonuses at the same time.
I love the approach. Back when I was a sales manager, I did that for 2 different carriers, and in both cases, the approach was very much, let's go through the painful process of getting you appointed. Then we'll look at at the business that you have. So I love the approach of if you have the business, send it in. We'll figure out.
We'll get you paid.
A way to
we'll get you paid
to get you appointed. Fantastic, and yeah, if I'm not mistaken, workers' comp, the commission is usually around that 10% level, right?
Mm-hmm.
Okay, so basically, we'll help the mod improve safety, and what I love about technologies that help reduce mod, right? And I'm putting it in insurance terms. The technologies that help prevent injuries ahead of time is that the agent, the broker, you're no longer just a price shopper, right? You're no longer just access to the market. You're actually helping the client improve their operation, make their people safer. That's a much better relationship, and
Correct.
You're much less likely to lose that client than just you're the way that we access the insurance markets.
Yeah, and that's why on that $50,000 account, we'll put together a quote for you. Jacob and his team are really good at providing quotes, but that typically is it's going to come down to a price shopper. And so we'll be lined up against 12 other companies that all have, a heavily credited quote, and they won't see the value that we bring. Whereas somebody who has seen their rates go up, whether it's because of losses or the mod or a combination of both, retraction of credits, they're feeling a little bit of pain, and they see the value in what we bring. And ultimately, that's the differentiator. And that's what our most successful agents tell us. You have something different that nobody else is talking about. You're a differentiator. You help me win new business. You're a wedge. There's nothing close to this on the market. Those are all things that people have said to us literally this week of why they're working with us as opposed to, say, just taking it to the next carrier.
Makes perfect sense. Absolutely. Congrats on this new capacity.
Thank you.
Those are big names, gigantic in our industry. And congrats on the growth that has already happened. I was very impressed with the technology when we first recorded. Very cool to see it actually working out.
Yeah, and to me the cool thing is where we are today is not where we're going to be in a year. And it's not just because we're going to be writing more business. As we write more business, we're getting more data. And as we get more data, our models get richer. So not only does our technology improve in terms of accuracy of predictions on detectors that we already have, we'll continue to introduce new detectors. So right now we're at 50. In a year, we could be at 70. We could be at 100. We could add additional verticals. Right now, we're primarily focused in the four-wall risk space, so manufacturing, wholesale trade, warehousing, logistics. In time, and we do have some tools already, but we're going to have even more tools over the next 12 to 18 months. We'll be able to add additional verticals into our core MGA, like contracting, hospitality. There's a lot of opportunities that are out there, healthcare. And so the sky is really the limit in terms of where the technology can help take us. And that's just going to provide even more shelf space for us as we're working with agency partners.
And really, it's been enlightening with agents coming to us. I mean, when you think about what's happened during the pandemic, a lot more remote work, a lot more people that want to live in city or state A while their operation is in city or state B. And so we're seeing a bit of a proliferation of cameras used where we wouldn't maybe normally think so. And so these are all agents bringing them to us. We wrote an auto dealer recently where same thing. They've got, cameras in place on premises and in service bays and paint shops, etc. And so it's not just the quote unquote typical four-wall exposure. We're working with an electronic appliance store. Why? Because behind the, outside of the retail area, you've got a ton of forklift exposure moving product around the warehousing side of the operation, if you will. So really at the end of the day, cannabis operations, while we may not have, the guaranteed cost market for that, with the, federal law requiring cameras in place in the grow operation, for a large enough operation, we could have the software as a solution play there. So it really comes down to if they've got video footage available to us and they can upload it to us, then we can really work with them to try to find solutions for them.
And then just to take that another step, cameras today are cheap. They've gone from costing thousands of dollars to costing hundreds of dollars. And so if you are a middle market account or frankly, if you're an agent that really plays in that space or wants to grow your shelf space in that space, we can work with you to provide some solutions around installing cameras. We can help with potentially different brands to utilize, or as long as we have a schematic of the account, we can help show you where you could place them so that we can capture as much detection as possible.
Mm-hmm.
Okay, so you already have cameras. We'll play with your cameras. You have a challenging mod, and no cameras will help you set up either way.
Mm-hmm. Absolutely.
Perfect. And I would have had no idea that in those kind of lower exposure type of settings, it would make sense. So that's super interesting.
Mm-hmm. Yeah, I mean, it's when you break down the data, the biggest portion of losses tends to be from soft tissue injuries due to poor ergonomics. So if you think if somebody's picking something up and lifting it 50 times a day, okay, while that item they're lifting may not be heavy, the fact that they're doing that 50 or 60 times a day, that can lead to back strains. It can lead to knee issues, shoulder issues, specifically if they're lifting overhead. Those are the types of risks that we see every single day in the manufacturing and the warehousing space. And then we have our on-staff loss-controlled ergonomics professionals that can help engineer that risk out. And by engineering that risk out, that helps lower injuries, it helps lower mods. And then it's a decision point on the policyholder standpoint. Hey, you're spending less on premium. What are you going to do with all that extra money? And add more people, acquire another company. And that's where we can really help them with growth as well, is if they're getting things set up from a fundamental standpoint with us, we can help them grow.
I've got to say, out of hundreds of interviews, nobody had made that connection for me. We'll help you with this, which will help your company grow.
Mm-hmm.
Interesting. Awesome. I don't know if there's anything else I should be asking you. So if there's anything else, this is your chance. Otherwise, thank you so much for coming today.
I would just say for the agents out there that are kind of tired about talking about price and the fact that your agency has, the best service out there, those are table stakes anymore. And so if you truly want to wedge, if you want to write and land larger accounts, if you want to help retain those larger accounts, like I said, give us a call. Just submit business. Send it to submissions@compscience.com, or either Jacob or my email address, which is just Jacob or Mike at compscience.com. And we'll get to work on it. Let us show you what we can do. Let's help you win and grow your book. And really, at the end of the day, also make your clients safer and help drive value to your clients rather than simply an insurance policy.
Yeah,
that's. Go ahead.
Just wanted to add two additional things. Go to our website, CompScience.com. You can get a ton more information in regards to our verticals, where we are licensed, how we're doing business. There's not live, but I mean there's tape footage of our AI at work, so you can see how it's actually working. Follow us on LinkedIn. We're consistently making updates. Jeff from our marketing side keeps us up to date on that standpoint as well, so you can see the various things we're doing, whether it's white papers, testimonials, podcasts, webinars. Mike is constantly on the trail. If you're an agent that's looking for a difference maker, get a hold of Mike.
Yep.
Mike's gonna help show you the way, and I'll do my best to usher these accounts through, get great pricing, get some action plans in place, and turn them out around.
Excellent. And I so completely agree with what Mike was saying about differentiating. Most agents are order takers, or at least they're perceived but by the client as just access to the markets and find me a cheaper price. Anything that helps you actually improve the client's operation is a giant win-win.
Yep. Those are the folks we want to work with. And frankly, they're the most successful agent of ours. So.
Makes sense. Awesome. Thank you so much for coming back on the show.
Thanks for having us.
Absolutely. Thanks, Tony.
Thanks, Tony.
Awesome. Thank you.